What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do 5 days a week, Monday through Friday. Unless if you were here yesterday and I didn't post one. But thanks for all the love. My wife got out of surgery. Everything is going fine. Thank you for all that support. In today's video, we're going to be going over just a couple different things. I mean, the market's been relatively calm these last couple of days, so you haven't missed much, even if I was putting out these videos. But today I noticed an uptick in utilities, so I kind of want to just cover that and cover some stock market indicators. Everything looks good thus far. And then we're also going to bring back in the couple trading ideas, some charts that I saw. There was actually a lot of great setups out there, but I picked a few that I will share with you today. So let's go ahead and get right into it. All right, welcome back. What we're looking at right here is the sectors within the S&P 500. These are the spiders. And what I want to call out here is just utilities. So utilities have been looking pretty bullish. So there's a lot of stocks within utilities sector that just have really good setups. And what we're starting to see today is a pretty good jump. Now, this is just one day, right? So it doesn't necessarily mean anything, but a lot of the times when you see utilities perform over a week, 2 weeks, it can show us a move into risk off investments. Utilities are lower beta. They typically pay higher yields for dividends. So if we start seeing this as a trend, we could be rotating out of these higher risk assets into a little bit lower beta, which would be a little bit lower risk assets. And we have some indicators that are not risk off yet, but we'll go over those here shortly after we go through the indices. And the indices, we're going to talk about the S&P 500, Dow Jones, Russell 2000 today. I'm going to show you daily and 30-minute time frames just so you can get some important key levels as we walk forward through the rest of this brief. So let's start with the S&P 500 daily time frame. Look I marked out this trend line right here, this blue one. It's been acting as a level of support. You can see touchdown, 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 touchdown. And then we haven't touched down on that yet as of now. And we had the bullish crossover on the price percent oscillator. Look at really the last 1, 2, 3, you can even call it 4 days. This could be considered just a moment of consolidation for a bigger move. So as long as the 5 EMA holds and the 20 period moving average hold and the support hold, this is still in bullish context as of right now. Yes, we have a lot of different political headwinds and all this stuff going on around us, but honestly, the best thing to do in most cases is not to try to create some sort of bias as to, what you believe is going to happen. Just look at the market data and the market prices that news and information in. So what we're seeing here, this is indecision. So what can we be priced in? Obviously, yes, we've been running up here, but now we're taking a moment to breathe and consolidate because we don't necessarily know. And by say we say the market is not really, sure about what's currently going on. Is it going to be bad? Is it going to be good? And you can tell that in the price action. You see very small range candles. They're doji candles, so small bodies and a small range, meaning the momentum up here on this boost up is slowing down a little bit. And you're going to see this in the Dow Jones too. So let's zoom in on the 30-minute time frame. I want you to look at a couple key levels that you can build trade plans around. We got a red line and a green line. Red is resistance, green is support. Green has been holding at 377. This is the SPY, not the SPX. Figured I'd bring up the SPY. You can mark out pretty much the same levels, if you bring up an SPX chart. But on the SPY, which is the S&P 500 Spider ETF, 377 is support, 381.50, you can just round up a little bit, is resistance. So if we break above resistance, that could be a bull flag and we start heading higher. If we start breaking below support, we still have the 200 period on this 30-minute time frame, and we have this gap below us that can act as a level of support as well. So just watch these key levels going into tomorrow. Let's look at the Dow Jones. Dow Jones looks just like the S&P 500. This is the trend line that we're watching. Okay, if it breaks that, then maybe we'll have a little bit of a cause for concern. You can kind of see the price percent oscillator kind of curling itself over a little bit, but still it's above zero, and we had a bullish crossover. What we're seeing right here, small range candles consolidating sideways. This is actually healthy in bull markets to actually have periods of consolidation instead of just this draft up without consolidating. So to finally see some sideways consolidation is actually quite healthy. Chances are, though, it'll probably just roll over and then it wouldn't be a healthy consolidation. But who knows what's going to happen there. Even if this breaks down, that could be a temporary breakdown into this level of support. But like I said, we need to start breaking above 31,250, maybe just below that, to maybe start seeing increased momentum to the upside. I would say after this whole transitioning goes, maybe we'll start seeing breaks of these levels, maybe tomorrow. I'm not too sure. We still have a lot of time left in the week. All right, so here's the DIA on the 30-minute time frame. Here's the key levels to look. Red is resistance, green is support. Kind of an ascending triangle right here. So you can argue that. So we have higher lows being built, and then we're kind of running into this wall of resistance. So maybe if we crack above, you can call it 312, that would, on good volume, that could be a solid breakout to the upside where we see more continuation. And then look for a back test potentially that once resistance is broken, it then becomes support, so they can bounce from there and then potentially head higher. If we start breaking down from this green level of support, we'd be breaking down from the 50 period moving average too. And then you can start looking at the 200 period and then also 304 as a level of support as well. In my opinion, I don't have the futures market in front of me right now, but if we start gapping up, keep in mind, once what we've been seeing is when the cash markets don't want to break above resistance, you see the aftermarkets just gap right over these levels of resistance. So I wouldn't be surprised if we just gap over this and then that becomes support and then we come back to back test it and then it moves higher. So that can be a potential trade idea too. Let's look at the Russell 2000. Russell 2000 has just been on a relentless tear up, overbought territory, negative divergence there. We saw a little bit of a red day today, down $1.51, not even a percentage point. So still very bullish context, but it's still not consolidating here really. So we're going to have to see this take a breath eventually. Not too sure when that's going to be. I'd be very hesitant to go long at these specific levels. Even if you get lucky, I mean, it'd be lucky. There's much more risk to the upside than there is reward. And when it comes to trading, you need to, measure out risk versus reward. Me personally, I like looking at 3-to-1 ratio. So I want to at least risk 1 to potentially earn 3, if that makes sense. And then if we look at the 30-minute time frame for the IWM, this blue line, it's a trend line, higher lows being built. It looks pretty solid. And we have a little bit of resistance right up here at just above 211. We can call it 211.50. And we kind of rolling over within this little channel here today. You can see it kind of pinged up to the 211.50, or where was that? 211.73. And then we came down, tested as support, tested again as support, and we bounced up from that. We have a couple other levels of support here, including a gap and this trend line. So there's just a lot of support out in this area. So if we start breaking through those levels, let's start looking at 201, where the 200 period moving average is, and then we have that gap below us as well. All right, let's go into some stock market indicators so we can kind of retouch up on the utilities thing and why we got to keep our eyes going on, with that in the week to come, or to finish the week and weeks to come. So first off, the NYMO, this is the Nysey-McClellan oscillator. Look at breadth. Breadth has just been dead. I mean, it's just been dead. We've seen a negative divergence where we saw dead breadth here, and I talked about this on a previous market brief, and we had that big pullback. Not to say that that's going to happen here, but the market itself is setting up for some pretty aggressive moves to the downside. So you need to just be prepared. And when I say that, I mean from a technical sense, when things get overextended, you got to think of it as a rubber band. You can stretch a rubber band out, but if you let go of the rubber band for a moment, it snaps back really quickly. So make sure you have stop losses. Make sure you're managing risk. You can see this right here, very poor breadth. We're at 0.9 as, the market kind of consolidates sideways, drifts somewhat higher. So we'll see here if we start breaking those levels, where this can potentially go. And then we have the sell signal. I'm just bringing this up there because I haven't talked about it for a minute. We're still not on the sell signal. We've had a warning signal, and that we've been on a warning signal since late November, and we've been kind of we went down lower, and then we're kind of going sideways. Look at the market is, full of just bullish sentiment to the max extreme right now. If we start crossing above that red line, that would be the quote unquote sell signal. Doesn't mean go buy a bunch of puts, okay? It just means to make sure if you have some profits or if you have some unrealized gains, you can, take some of those profits and enjoy them. Don't just watch them potentially get washed away really quickly, if we have a pretty aggressive down day. Here's the VIX volatility index, fear index. What's interesting here is the markets didn't really finish that down on the day, but we did get a pretty big down day, not the biggest, but pretty big down day, 4.8% down on the VIX. And you would think that you might see the market, make another all-time high with this kind of a down day, but we didn't. I redrew out this channel. Look at this is just kind of something that I'm going to be tracking. We have this gap here since February, March, still not filled. So volatility is still relatively higher than usual when you're looking back to 2019. So this is still, the strong potential that we get some sort of vol spike here in the near future. So we got to make sure to manage this, keep an eye on it. I'd say right around 2050 is a good level of support for the VIX. So if we start drifting down there, we might start then seeing bounces from that level. But just keep an eye on this trend line up here. If we start breaking above it, we might get some sort of squeeze. And if we start, I don't think we're going to have some aggressive move to the downside, but the market can definitely continue to make all-time highs and melt up even further if we start coming down in the lower range, below 20, I'd say, and then start filling this gap. So we'll keep our eyes on that as we go. Lumber gold ratio. I had an interview with Michael Gayed. We talked about this ratio and the rate of change. This is the 3-week. This is a risk-off signal on the 3-week, but he uses the 13-week. He said 3-week, you can use it too, but you'd be wrong more often and you'd be trading more frequently. So I just put that up there just so people know, hey, on the shorter term scale, it's saying be careful here. And you could kind of see that in the price action right now, right? On the weekly time frames, we had those weekly candles last week, and now we're just consolidating sideways right now. So, and on top of all of that, if you went to a risk-off asset, utilities are doing quite well right now. So it makes sense on the 3-week rate of change. 13-week, we're still very far from crossing below zero, but we're seeing a little bit of a downtick. You can see lumber take a little bit of a hit. We're seeing gold. We did see gold take a hit, but we're kind of seeing it bounce just a little bit here. Could be a dead cat bounce. We'll get into that. Not too sure. And then we have the XLU over the SPY. This is Michael's beta rotation signal. And this kind of just shows you, when you should move into utilities versus the SPY. Once we cross above zero, that's that risk off play. And right now we're still negative. And you just got to look at this once a week, right? At the end of the week, if we're above zero, that means the following week you would be going risk off, and then you would change it as, the signal changes. Now let's get into some trading ideas. Only got a couple of charts to go over. Like I said, there's a lot of different setups, and if you just pull up a volume chart or a screener on FinViz and you maybe look at a hammer candlestick, you're going to notice at the top of the volume, if you make that, and then also make the beta over 1 if you want like faster moving stocks, a lot of oil stocks, okay, coming into the play. So and then also some biotechs, there's all kinds of stuff. This one came on my screener called the Party Starter. I haven't actually shared that video yet. Maybe I'll make a video called the Party Starter scan. But I found this to be pretty interesting setup. Just look at the amount of volume that came in. We see the PPO crossing itself over right here. We're tapping into this I don't know if it's an all-time high, but this previous high right here. A little bit of a negative divergence, but that's okay. As we've seen previously in other charts. If we do break past 750, and this volume kind of holds, that could be a very solid breakout that we'd be seeing, and this could potentially squeeze a lot higher in the near future. You want to make sure that you're managing your stop losses with this and being very careful, because this is a very, very fast-moving stock. You can see that on the y-axis from, $7 to $7.50. If you buy, 100 shares, within, just a very short period of time, it could swing $50. So that's 50 cents right there on that swing. And you can see these candles are quite big. So you can move over $1 per share plus, on a day. So you got to make sure you're managing risk is what I'm trying to say. And then we got the CPE right here, Calon Petroleum. I just found this kind of interesting. Big cup, kind of a handle forming right here. A long time frame for the most part, not crazy long, but basically since mid-July of 2020. And now since December of last year, we've been just kind of consolidating sideways. We broke out. We have a nice little volume accumulation here. Nothing too crazy. But if these levels hold, you might be able to just track this up. So you can buy in right around 15 potentially, maybe just above 14. Have a stop loss below the 20-period moving average, maybe just below that. And then you would just kind of trail along as that continues, because this is also a very quick mover. So you want to make sure that you're managing your stops, because this thing could just It can rip down on you at any point. So like I said, this is just trading ideas. I don't have any shares of any of these companies right now. Full disclosure. And then this is Cinemark Holdings. I found this just to be a very tight pattern. This is an ascending triangle from a gap up. You have higher lows. You're running into this area of resistance. Hey, maybe resistance is going to break. I'd like to see a break on big volume, but that could be a really good play here. If we break above, I'd say $18.50 and close above there with good volume, that could be a very solid ascending triangle. Overall bullish context, you had the 50 that had a golden cross of the 200 period. 200 is kind of sloping up slightly, but it's kind of flat. And then you got the 20 period also, price actions above it. So things are looking good so far, but you want confirmation in this environment. Now let's go ahead and hop into commodities. Commodities have been going bonkers. I'm only going to show you gold, silver, and the CRB, but if you look at like soybeans, if you look at corn, I believe wheat, all of them are just going just bananas right now to the upside. I even caught, I posted on Twitter. If you don't follow me there, you can follow me there. But I posted a chart of JO, which is coffee, and I'm up like 4 or 5% on the day with that. So it's just been crazy for agriculture and certain commodities, to say the least. So let's go over gold, because gold's been getting hammered. A little bit oversold here on the full stochastic. Now we're kind of seeing that little bounce. We saw that actually right around here on this other big down day, and we talked about how this matches up to the 10-year yield, but then it kind of just dead catted or rolled over to the 200 period. Well, we're at the 200 period now. We have some small body doji candles. So no strength is really showing up right now, but maybe if we start getting above the 50 period moving average in this trend line, maybe this was just a temporary little shock to gold, and then we'll try to re-break out of 1960. But as I see it right now, it's still in this very, very short term. As far as the last week or so of trading, it's swimming up a river. And then if you even go back to August, lower highs, lower lows, it's swimming up a river right now. But it does have the 200 period Godfather moving average acting as support at this particular point in time. Silver looks a little bit stronger than gold because it is trading above the 50 period and trading above this breakout. So we broke out, back tested, and now we're kind of holding above. Silver, I think, is going to be a great play, especially with years to come, including the miners, given the fact of all this news and all this innovation around EV vehicles, and same with copper around new infrastructure. So I like silver, and I like silver miners right now. Here's the CRB index. CRB index, when they say, inflation hasn't been taking place, just look at the CRB. We've just been jamming up higher, in a very short period of time. This is the weekly period. So since November, from 145 to 175, that's not a small move. It might be due for taking a little bit of a break, but it did get past this resistance, and once resistance becomes broken, it then becomes support. Once resistance breaks, then it becomes support. So, if we hold above 165, 170, that kind of range right here, that's really good for commodities moving forward. Now, the thing that can take commodities out, the thing that can take equities out is the dollar. And the dollar we need to be very careful with here, because the dollar has been showing some signs of strength. And it's still swimming up a river, but if we get a dollar bounce here, I think the long-term view of the dollar, I think it's not going to survive at all. I don't think we're just going to see it hold at a very high level, but bounces and moves higher can apply a lot of pressure on commodities, precious metals, even equities. So what do we got to watch out for? Well, first off, we broke out of this falling wedge, which is a bullish type trade. We drifted down, and then we started breaking up a little bit, and we're above the 200 period now. So now if we start getting above, I'd say 90, let's just say the 50 period, 91.24. But as price action stays below it, it's going to continue to drift lower. So maybe it might be at 91 at that particular time. If we start getting above that, the big area that you want to watch is 92. 92 is a level in the market brief we were talking about quite some time. If we broke below it, we're going to see a pretty big move to the downside, which we did. And then that move to the downside, what did that do? Well, it helped out Bitcoin, right? From mid-November, Bitcoin rallied incredibly. We saw also equities do extremely well. So if we start seeing a really strong strength here in the dollar, and maybe we go to 95, that's going to put a lot of pressure on assets like Bitcoin, commodities, gold, silver, etc. So you got to be very careful and keep your eye there on the dollar. On the weekly time frame, looks pretty bullish as far as the setup goes. We're in this area of support, and you can see here on this falling wedge, we tracked sideways for quite some time, bullish divergence. Now we're tracking a little bit sideways here, still within the pattern, bullish divergence and bullish divergence there. Monthly time frame though, kind of interesting. So you can see back here, bear flag, right? We broke below it, and then we started cracking above it. And if you even look here, which is kind of cool, we had this, basically bearish crossover. It was, I don't know if that crossed to be a bullish crossover, but whatever the case is, it started spreading right here after going flat. And that's what really created this bearish momentum to the downside in 2017. Then we went sideways for a little bit and broke beneath the bear flag. Well, just look how similar it is right here in 2020. So pull to the downside. Okay, you can see right here we were going sideways, and then we started spreading open at a much lower reading on the PPO. We broke below it. We didn't tag the 200 period moving average, so that's still maybe a possibility, potentially, I don't know. And then you can see over here we started breaking back into that channel. So maybe this might be a very similar play if we start breaking back into this channel, and breaking into that channel is where? 92. So keep an eye on 92. I was looking at this on the monthly time frame, and that's why I was also saying back then, if we break below 92, we can see the dollar head lower. We can see gold, silver do better, and we did, right? But what really did good was equities and Bitcoin. Let's look at the yield. Let's look at bonds. The 10-year had this huge run up that put a lot of pressure on gold. I showed that. If you haven't watched that video, I posted a video recently. It is called How to Prepare for Gold and Silver's Next Big Move. So if you haven't watched that, I'd highly recommend it. I'll post the link in the description. And then you see over here, it's still building higher lows on the 10-year, higher lows on the 30-year. Now we're starting to kind of curl over a little bit. I don't know if that means it's going to come back down and test these levels or not. But the Fed's going to have to do something about this if we start reaching up higher, this 1.4, 1.5 range. You can't just ignore that if we start seeing aggressive moves to the upside. This right here, just in 2021, we were up, almost 25 or 26% in a few trading days. So we got to be careful with that. And I put the spread down here because the spread is important to watch. And now I don't have it, so you can see the history, but when you see the spread increase like this, you can see throughout history when you see this take place after an inversion and you get the spread at these levels, you typically walk into recessions. So this right here is not necessarily a good sign, seeing it steepen at these specific levels. Not to say that that's exactly is what's going to take place, but you've got to at least prepare yourself for the possibility, because history can repeat itself or at least rhyme. And I promise you, if you want to look at a longer term chart, just pull it up and look at this 10-2 or the 10-3 month, the 10- whatever, and you'll see after an inversion, and then you see the curve steepen, you typically follow a recession right around these levels. So, something to keep an eye on. TLH is the 10 to 20 year. You can see that we broke down from this channel, and I was kind of saying, maybe that's just a temporary break below this channel like it was here, and then we see it rally back up. Well, what do you know? We saw a little bit of a move up tick today. That could be because we're oversold, and now we're seeing it move up, but we'll continue to watch this. Overall, short term, lower highs and lower lows, meaning that the trend is still down and it's swimming up a river to get back up here. So we got to keep an eye on it. Overall, let's wrap it up to a conclusion. What do we need to keep an eye on? Well, on the previous market brief, I talked about the weekly candles that were hammer candles. We still got to pay attention to that. That can still be somewhat of a signal. And then just what's going on with utilities right now, we want to follow that. We want to track that because they are looking like some pretty bullish setups going on right now. And that can, foreshadow potential transfer from riskier assets to more risk off. But it could also be very temporary right now, okay? So constantly got to keep looking out for, performing sectors that are showing relative strength, and then individual setups within those sectors to do better. Overall, that's all I got for you on today's market brief. Hope that helps out everybody, and hope everyone's having an excellent week thus far. See you later.